Okay. Okay. I think you're the only one here, Alfred. Yeah, it's okay because the rest basically I've marketed it at 11 o'clock. So some might come in, some might not, but I'll send the recordings anyway. Okay, so I've started earlier on by giving us a little bit of a run through the trend. So I just want to welcome everyone to today's Monday's webinar by Bretton Academy. Just very quickly, I want to introduce the Bretton Financial Trading Academy page on Facebook. And you guys can see later, you can view the latest trade ideas, also links to the webinar and things like that. So this is the Bretton Financial Trading Academy Facebook page. And now let's get to knowing the markets a little bit because this week is going to be quite interesting. There's a lot of trading opportunities, especially for US dollar pairs. We have got 1.9 trillion dollars is going to be released in the market this week, sometime this week, but tomorrow will be a very important speech by Powell. The package 1.9 trillion US dollars is basically for the COVID relief program. And that is going to impact the market a lot. That's going to drive US dollar up. That also means that it might actually drive gold lower in terms of the corrective move. So we need to be very, very careful. Then we need to also look into which other pairs that we can actually transfer our risk to in order for us to not get too much involved into trading dollar pairs as well as trade gold and all that at this moment of time. We want to find the right timing, but meantime, we can actually look at opportunities, especially for NZD pairs. So I have begun to draw some of the patterns on NZD pairs, CHF pairs as well. I will tell you why CHF pairs is another one to look at. So we've got NZD pairs and CHF pairs, mainly because for NZD, we see a lot of positivity in the economy, a lot of positivity in the current COVID situation, a lot of positivity on it's increasing the rates as well, and a lot of factors are actually driving positivity for the NZD. So that basically is going to be driven with what do you call that? The whole data release for this week. For gold, let's get to gold in a bit, Alfred. Give me a second. We just want to go through firstly on the market outlook in terms of the trend first, because the trend is the most important thing. We need to understand what the trend is as of now. The trend is as of now, as we mentioned to you, we're expecting a lot of money coming in into the liquidity of the market this week sometime, but tomorrow is a speech, so that is going to drive. We need to look at the news, whether or not the sentiments for US dollar, because you're talking about gold, but you need to look at US dollar because gold's situation is controlled by what goes on in the US and also the US dollar. So US dollar is expected to be strong. So if you are already selling your gold, there is a chance for it to look at selling, but it's not a matter of selling or buying. It's a timing of when you are buying and when you are selling. So whether or not to continue the selling, if you are already selling, may be a good choice, but it's not good to just say yes or no right now. It's best to look at the chart and then to decide, what's best in terms of price levels. So here, I just want to share a little bit about NZD. As well, as you can see on Wednesday, we've got loads of NZD news, and these are all high impact news. So we have got loads of opportunities with regards to CHF pairs as well. So this is where I have actually shared earlier on when I was online and then I got disconnected. Give me a second. I'm using the Forex early warning as my heat map as well as the Forex, the Action Forex website. So here on the heat map itself, we can see that all the CHF pairs from Asian session has been very active on the buying. That means CHF is really, really very weak, very bearish. And then now we are going into the European session as well. And we are seeing that USDCHF has actually picked up quite a lot. So USD is seen to be increasing in its bullishness as well, you see. So that basically can be seen here as well. You can see all the USD pairs here. It's all in green, and everything versus the USD is in red. That means USD is strong as well. So this is an indication that USD is picking up in its momentum already starting from today, expecting this big liquidity coming in, money funds coming in for the COVID relief program. So this is more a risk-on environment. So risk-on environment meaning that the USD is going to be seen more buying taking place for the US dollar. So all the safe havens, including gold, CHF, JPY, will be on the weak side. So that means a lot of selling on the safe havens because it's a risk-on sentiment, risk-on environment at this moment of time for this week. Okay, so now we can get on to the chart itself right here. And I was sharing about USD CHF, even though we've got some buying opportunity, but on the 4-hour chart, I have laid out a pattern, got an ABCD pattern going up. But at this stage, because of the yellow lines that I have drawn, I've drawn the yellow lines based on resistance. Okay, so that means your buying opportunity is really small for this moment of time, only about 20 pips or so from 0.9120 area right up to 9040 area. So it's about 20 pips. You minus your spreads, basically, you've got about 16 pips or something like that, okay, or more or less, depends on the broker. So this is your trading opportunity for the buy at this moment of time. I'm not saying that USDCHF won't go up much more, but then it's limited at this moment of time because of all this resistance zone that I have drawn using the yellow lines. So here we are looking at, yes, some buying opportunity, but in terms of timing, you've got something there to buy, but then at this moment of time, it is still unpredictable to look at a straight on buy to the upside until it hits D point. That is not really a very wise or less risky move to just leave your trade open now and just hope for it to hit the D point. That is not what we want to do because we want to aim at the right zone areas for you to trade with high probability and low risk. Okay, so let's now head on to gold. And with gold, for example, let's just see. Gold has actually done really well in terms of the previous selling based on this ABCD pattern from the centroid area at 1820 was our entry, and then we exited at 1765. Now we are on a little bit of a buy type move, especially after it has gone above the B point right here. That means this is an area of support that it has taken quite strongly. So yes, we have started buying a little bit here at the 1785 area or 1790 to do a little bit of buy. So this is where it is starting to reverse right now because the US dollar may be weakening a little bit in terms of correction only because it has more room to go up and up and up. Why? Because of the things that are going on in the States at the moment with the COVID program and everything else. So they're expecting a lot of buying. So if they're expecting a lot of buying for a longer term, they'll start to sell a little bit now so that they can buy US dollar for cheap. You see, so now the US dollar as of now, maybe short term or something like that, today until tomorrow, may actually be a little bit weak on the weak side just to trick the market a little bit. But what they are doing is just to drive the price down a little bit so that they can actually buy cheaper later on. So we've got more room to buy the dollar and more room to sell the gold, actually. But then now, for those who are selling gold already right now and they are on a sell, you will experience a little bit of floating in your account, and mainly because of this movement here. So this movement here might actually go on and last until the 1820 area. So this is the amount of loss. If you are on a sell right now, the amount of loss to expect is from this point until 1820 area back to the centroid area, because that is where the biggest sell has taken place as well. So I would expect it to go back up there to the 1820 area, or maybe a little bit higher. So meet one of these three lines and then find resistance and then come back down. So this is basically to answer your question as well, Alfred. Do you actually hold it? It would probably be no choice for you at this moment to actually hold it and leave it until it goes up. But the question is whether or not your equity is enough to sustain this move to the upside, maybe a bit more aggressive as well to the upside, because sometimes they want to trick the market as well to tell you that, okay, gold has got a very big opportunity to go up and up and up. Yes, but then not now, mainly because of the US situation and the USD situation at this moment of time. So you just want to know whether or not you have sufficient equity to sustain this corrective move for gold to the upside first before it come back down again. So if it goes up there around this area here and then find resistance again, then it has more room to go down for sure, mainly because of all these very bearish mother candles as well here to the left. Okay, so that is your position for gold at this moment of time. Any questions at all, Alfred, for your gold situation? Okay, cool. All right, so there you go. That's for your goal situation. You've got some very short buying opportunity, as I say, anywhere between 15, 20 pips only right there, possibly. And it's still a risk as well, because we don't know whether it might find a reason to actually just find resistance here and then just bang down here. So that is for the USDCHF. Overall, if we go onto the daily chart, it is not very clear, even in daily chart for the USDCHF. So what I would suggest is to go on to another pair, which is the NZDCHF instead, because CHF is expected to be really weak. NZD is expected to be really strong. So if we combine these pairs, and let's see whether or not we could find it to be clearer in terms of its trend, most importantly. So that is for the NZDCHF. Let me just make sure we've got CHF right here, and that's your NZDCHF. Now, when we look at NZDCHF on the 1 hour chart, you can see that not only the candles are above all the three lines, but it is really clear in terms of the movement of the three lines. EMAs itself is actually heading upwards, really nice and clear. This is a good sign. I would actually insert an extra line, an extra EMA, which is the 8 EMA, which is I use that occasionally just to give you a little bit of an idea of how strong the trend is. So if the 8 EMA is really far away and very, very strong upwards, far away from the three other lines, that actually means that it is really strong. The uptrend is really strong for the NZDCHF. So then we compare that to the 4 hour chart as well. We can see that it's similar case. This one here may be a little bit better than the other pairs, the three lines, the EMA on the 4 hour chart, meaning that it's upward moving. So the same goes for daily chart as well. So I must say that if you compare your USDCHF with the NZDCHF on 3 time frames are clearer in terms of its trend. So it's much better, it's nicer as well. I would prefer to actually look into more opportunities for the NZDCHF, mainly because of its trend as well. So I like the way it moves with the candles as well, really strong candles on the daily chart itself. So if we go back down to the 4-hour chart, you can see that we have got several patterns here. There's an A here, B here, C here, D. Maybe the D is almost reaching for this pattern right here. We can always just look at how far that has due. Okay, you got some movement, but if you take your A from lower here instead, we just want to measure this A to this B. Where does your C sit on? 50%, not too bad at all. So that's not too bad. If you take that as your A point, you can always look at your lowest area right here and drag that one up here. So that is your A. Let's say your A is from here. Your B is here. C is there, let's say. And that's a finishing D point right there. So now you want a fresh area. So you want your A here and your B to be here. Okay. And your C point there. So then we stretch that out to the lowest point here. So you've got a little bit of movement on based on the 4-hour chart right there. For your projected D point, 6994. Now we are at 65. So let's just measure that distance right there in terms of pips. Not much at all. That's about 20 pips or so. But to plan further buying, maybe for the long term, it's a potential. It has already surpassed this big falling area resistance. So that means it's got some space in terms of buying opportunity. So what I want to look at is to the left and to look at whether or not following the current price in the past, have we got really strong buying that has taken place. We've got one here. We've got a single bullish mother candle right there, but you've got a stronger one right here that actually happened. Let's see, happened in 2018 crisis time. 2018, sorry, that's November 2018. We had a big buy area right here. Mother candle there, quite a strong one that taken price quite high. Not too high, but reasonably high with very strong bullish candle as well. So you want to mark that area. You want to mark that opening price of that buying candle right up to where it has closed as well. So that is a potential buying zone based on the mother candle itself that's worth about 85 pips. The strength of that is 85 pips there, that zone, starting at 65.72. So 65.72 wouldn't be a nice ideal buying price anyway, which is exactly where the current price is. So you want to adjust that 6572 to 6590 instead, because it's 10 pips above the psychological number of 80. So you want to do that at 6590 instead. So then you have that area now. And then if you want to take profit, 6655, maybe not. So you want to adjust that to 6640 instead. Make it a little bit narrower, so you wouldn't be getting that 80 pips, probably less, but then a little bit less risky as well. So there you go. So you narrow that down there. Oh, 65. 6640. So now with this, you can measure that. That's 50 pips. So you've got about 50 pips right there. It's less than the 80 pips earlier on, but then still it's, you know, it's quite significant. It's good to probably create a bit of a pending order right there. And that is your area there to consider a bit of buying. Perhaps if I were to take my A from here, B, like, let's measure a little bit. Still enters there, but doesn't go all the way up. If I were to get another A point right here to my B point here, that's your 61.8. It's already done deal on that one. %, on this one here, all the way up a little bit. That's already there. Okay, so 65.90. That would be an area that I would look into a pending order right there. Do your ADX as well. You can always go on to insert indicator, directional movement index. Okay, you have got building up momentum potentially because it's a lagging indicator, so not 100% trustworthy. Welcome, Mr. Kunun. How are you doing? Okay, so yeah, I've just shared some trade ideas, but I'm looking at NZDCHF at the moment, as opposed to USDCHF. So we've got various pairs to analyze as well. Apart from NZDCHF and USDCHF, I would like to also create some trade ideas revolving AUD Euro CHF, and GBP CHF. So when I end this session shortly, I will then work on other trade ideas, especially with CHF and NZD pairs. So I want to look at all these trading opportunities based on that. NZD is just looking really strong, and we only started on Monday, so I would think that this whole week we could see a lot of NZD movement to the upside. So NZD pairs would actually be very good, and we are also looking into a market that is risk on market. So people are buying all the other pairs and they are not really buying the safe havens and not putting their money into the safe havens. They are being a little bit more greedy, less risky as well. So then we are expecting gold to actually go down as well together with the other safe havens. Okay. NZD USD, we can take a look at NZD USD as well. NZD USD, let's just take a look. NZD, is it there? NZDCAD, NZDUSD right there. Okay, NZD USD would actually be a little bit tricky, mainly because NZD is expected to be very strong and USD is experiencing a lot of liquidity money coming in this week as well. So we are not really very certain. I wouldn't combine NZD with USD because you want to combine something that you feel and know in the market that there's a lot of reason for you to buy it, or to sell it, and then you combine that with another currency that has that similar. So at this moment of time, NZD is really great to look at a lot of buying, right? And USD as well, we're expecting a lot of buying. So we wouldn't actually be combining a buying type currency with another buying type currency. Okay, so it wouldn't be a good one, but also because you can see, you've got a bit of a side market here, and then you can see now it is actually, coming down as well. That is on the 4-hour chart. And the way it's actually moving as well is not very nice, as nice as NZD. You want to find the NZDCHF type movement and trend, and then you plan that based on that. Okay. All right, good. So with gold, that is the situation at the moment for gold, as we have talked about earlier on. So it is very tricky because it's based on what's going on in the US and also with the US dollar. So we need to watch a little bit on the news, but then meantime, while you trade, it's best to trade pairs that are not directly connected to, or no USD pairs at the moment. Don't trade gold, for example, mainly because you might actually find sudden movements because the things are not decided in the market yet. It's expected to move a lot, but then it's no exact timing as yet. When the 1.9 trillion will actually be released in terms of the timing, it's not decided yet. It's going to be sometime this week. Will it be tomorrow exactly? Will it be a day after tomorrow? We don't know that yet. But then the market will actually digest this news, and then the news will actually make US dollar stronger and stronger and stronger, depending on what is said tomorrow in the Congress as well. Tomorrow is the speech by Powell. So that is quite powerful speech, okay, by Powell tomorrow. So this is what's going to make. If you want to buy gold now, do you want to take the risk to buy gold now? Let's see if you want to buy gold now, right? You've got a little bit of a movement. Yes, you can. It depends on your current portfolio as well. I mean, if you have been winning quite a bit last week, you are on a gain. Let's say you are on a 40% plus gain last week, then you can afford to actually risk 10% of your last week's gain. So if you have gained 40% last week, let's say, are you willing to make that 30% only? So then your 10% of last week's gain, you are going to contribute to the loss potentially. If you were to lose, you want to use that as your loss. So if you are willing to do that, then yes, it depends. Because for me personally, I would only trade when I see that there is a reason for me to trade based on the pattern, based on the trend. Because for now, for me to actually trade a buy, it's on a downtrend. I mean, it's very clear, right? On a 4-hour chart, all the candles are under all the three lines, and it's actually a downtrend. So in a downtrend, I wouldn't actually be trading anti the trend. I'm a trend trader. So it depends on you, actually, on your personal style and also on your risk appetite. And that is basically it. So to answer your question, you can buy. Yes, you can. You want to sell? You can as well. But it all depends on how you are trading. What's your style? Is your style anti-trading? If your style is anti-trending as well, then you can do that. But you've got to be careful with it, because as you see on the 4-hour chart as well, the candle now is approaching the 50 EMA as well. You want to look to the left as well. You want to go on to the 1-hour chart as well, and you want to see where are your risks. Now, if you were to buy and buy and buy on the 1-hour chart, you can see that you are really close to the 200 EMA, which can actually be your resistance level. If it passed through the 200 EMA, you are looking at another resistance level here at 1813.66. That is another area there. So, I mean, for me personally, there's just too much risk to buy now. So I wouldn't personally, but for those who have the risk appetite and you want to gamble the market a little bit more, because it's a gamble. If you are trading now, it's a gamble, more of a gamble, because you are trading anti the trend. That's it. Okay. Okay. So there you go. If you want to buy gold at this moment of time, it's based on emotions to buy gold. Okay. It's not based on analysis, because based on analysis, it's just not good timing, because you've got a lot of resistant areas. You've also got a lot of risk in that. Okay. That's just my opinion. So there you go. There is just no buying yet in terms of overall market for gold. I mean, overall market for long term for gold, a lot of people are putting all the prices up for gold, but then we are trading day by day, you see. So if you're trading day by day and you are looking at trends, you want to take it stage by stage. Now, for me, when I look at the 4-hour chart, or even let's say the daily chart right here, you can see that even on the daily chart, the prices have actually gone under the 3 MAs. It's actually on a bearish type territory. If you go into the weekly chart, then you see that, yes, it is still a little bit above. And you go to the monthly chart, then it's way above. That means you've got a long uptrend, but this is for the long term, maybe 6 months, 1 year and above. You see, so at this moment of time, what I can see on shorter time frame is selling opportunity with a lot of ups and downs, up and down, but then it is actually selling opportunity. So if you're entering the market for a buy, that means you are trading the correction, the corrective move of a downtrend at this moment of time. So it is looking quite clear on the downtrend type movement for now. But then when the market is fueled by US dollar being strong, with what I've mentioned earlier on, with money expected to come into the US dollar to make the USD stronger, then it is going to push down the current downtrend of gold much more right now. Okay, so here, for example, if we look into gold, bird's eye view using patterns as well, there is sort of like an upside down pattern. Okay, this upside down pattern can drive the price upwards, but only 50% from here to here. So that basically means there may be a limit of gold to go up for now, up to this level here, and that is this level here. let's say 1860 area. Okay, so there is, I mean, from a patterns perspective, it might zigzag go up until there, but anything above this blue zone I've drawn is quite challenging for now, for the next couple of months. Okay, so it may go zigzag, but not really, because we are working on news factor, vaccine situation, economic situation, political situation of the US at this moment of time, and they are driving a lot of strength in that area. So that will only drive US dollar to be stronger and stronger for now, at least the first quarter. So we've got a new president as well, and you guys know as well, when you have a new president, at least for the first 2 quarters, it needs to be very positive. If not, it wouldn't actually be following the trend of all the new presidents that come in. So every time a new president comes in, there's always going to be strength, at least for the first 2 quarters of the US dollar. So this is where we're expecting, maybe prices may go up and down for gold, but then not a real nice straight line trend upwards for gold at this moment of time, because they are still buying gold, so they want to buy it cheap. So this is basically it. Okay, so for now, there you go. You have the centroid area right there for gold, and that's your limit right there, but you need to watch out on the EMA lines as well. Okay, all right, there you go. Any other questions, guys? So I would end the session, and then I will do some other pre-recordings on specific pairs as well. So pairs that I analyze, maybe I will do a very short video on each pair that I will be trading myself today, and then to give you the entry, exits, as well as stop losses. All right, guys, no questions? Any questions, Alfred, Mr. Kunan? All right, good. Okay, thank you, guys. We will have this webinar again from time to time, but then Mondays, Wednesdays, and Fridays are meant to be for Bretton, and I will add that up with my personal videos as well. trade ideas, signals, anything that I want to update the market with, I will send the link out. Okay, take care, guys. Thank you very much for joining me, and we'll see you again. Okay.